up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have a question or stock you want to go over together live, leave it in the comments section below. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, happy Friday, everybody. Happy mega long weekend Friday. Let's check our open positions. First up, short call spread on Lyft. Where are we at? Down $8 or so. That's fine. XBI. We'll go over XBI in a moment. We'll recap this trade from start to finish. Palantir. Where are we at? Flat on this one, down a buck. CCJ is coming back too, down 41 bucks. That's not so bad. And the semi ETF, we've got some work to do on this one. Same thing. This is all March expiration, okay? Starting either today or next week, Monday, all of our new trades will be now April expiration, okay? Let's go over this XBI trade and what the plan is for this one. So to recap, let's zoom out here. On November 30th, we opened a short call spread and received a credit of $54, okay? And that was for January expiration. Sold the 85 call and bought the 90 call. The spread moved against us, and I think somewhere around the 20th of December or so, we rolled it to February expiration where we are now. The move continued against us. It's gone sideways since, December 22nd. So for over a month now, it's just gone sideways and has not moved in our favor. So the entire spread is underwater. Okay, so at this point, we're trying to roll at zero. We rolled at zero last time. If this doesn't get filled today, it may get filled. There could be a Hail Mary here. If not, so we'll set an alarm 5 to 10 minutes before market close today. If at that point, 5 to 10 minutes before market close, this thing is well above 90, like say where it is right now at 93, we're going to let this expire completely in the money. So both contracts will be assigned and we'll have 0 shares come Monday morning. If this falls today below 90, where part of the spread is in the money and the long part's out of the money, we'll manually close this trade before market close. All right? Because that way, the long one will expire worthless, but the short one will expire in the money, and you'll be assigned short 100 shares on Monday morning, and I don't want to have that take away from capital in my account, okay? So that's how it works. If there's some miracle where this sells off greatly today, and we can roll it at zero, so don't receive a credit or we don't pay to roll it, well, then we get some more time to see what happens. But as of right now, that's today's plan. So we received a credit of $54. If this one goes max loss today, which it probably will, 500 minus 54, that'll be $446 loss. And the good news is, since this was opened in November, the vast majority of these losses were taken in December. So that goes for last year's taxes. That's good. And if you've been following along, I don't have many losses. I think the first loss last year happened in December, and that was a short call spread on Boeing. So this one, the majority of losses were taken last year too. Some losses here this year, $230. That's okay. Don't worry about that. Losses happen. If you're watching a YouTube channel that's trading and they don't have losses, it's fake. For this Friday. First up is Square, down 4% today. Post-earnings move. No, it's not a post-earnings move. Forgot why they were in the news today. They do have earnings on the 22nd, so that's next week. I think this wasn't supposed to be on the list today. This was supposed to be for next week's list. That's okay. Let's move on then to Applied Materials, AMAT. This is a post-earnings move, up 7%. Looks like it's gapped up and is selling off slightly up here. And it looks like this is an all-time high as well. All the semis have been on a roll. Hence the semiconductor ETF going against us. Okay? So March expiration is 28 days and April expiration is 63 days. We're right at that point where we can pick either one. You can open up positions in March expiration or April. Let's just see what each one has to offer. For March, you'd want to sell on the call side the 220 and buy the 230. Liquidity's okay. 9-cent spread here, 9-cent spread here. A ton of volume at the 210 and the 230. Put side is fairly priced at the 180. Let's look at the 220, 230 spread. We'll take 233 minus 118 divided by 2. That's 5.7% on a $1,000 spread. In April, you'd have to go out to the 230 as well, 230, 240. Less liquid here. I think we'll skip to the spread is too wide for April, so let's skip this one. Even though it is post earnings, there is a little bit of higher than normal implied volatility. Let's keep going. Roku. Post earnings down 22%. So we've traded Roku a couple times over the past couple months. Some downgrades. Oppenheimer downgrades Roku to perform. I wouldn't be surprised over the next Tuesday, Wednesday, we got some more downgrades to keep moving this down. And it's opened up below the 200-day. It'll probably close below the 200-day, so got to keep that in mind. There is some upward momentum here. Could catch a bounce around 60. Let's just go with 60. Somewhere between 60 and 67, okay? A lot of support from back here in 2023. Also again in July of 2023. And then also slightly back here in October of 2023. So there's some support at 66.50. Let's just call it 67. So put side for March, you'd want to sell the 60. That makes sense. This one is now fairly priced. Me personally, I would just sell the put spread, not the put. Sell 60 by 55. What do you get? 61 minus 21 divided by 2 divided by 500. 4% there. If you went out to April, selling 55 and buying 50, that's 90 minus 46 divided by 2 divided by 500. That's 4% is there. Well, so call side maybe. March, you'd have to sell the 85. It's a little close. Sell 85 and buy 90. 145 minus 80 divided by 2 divided by 500. 6.5% if you sold the call side. April, you'd have to go out to the 95 and buy the 100. 149 minus 104 divided by 2 divided by 500. It's too far out. If you want to trade the call side, you'd have to do March. The 85 is a little close. Where is it on the chart? 85 is right about here. That seems fair considering we've only got 29 days till expiration. I would believe there'd be another day of sell-off come Monday. reaching down to 66, 67. Tough. This one's tough. I think we'll put Roku on the list if Monday is a green day, as in it moves back up to the 200 day. Maybe sell the call side on Monday, but not yet. Sorry, Tuesday. I keep forgetting Monday's a holiday. So we'll come back on Tuesday. And if it's coming up green on Tuesday, we'll sell the call spread as it hits the 200 day. Okay? Next up, GE Healthcare. GEHC. I don't know if this was on the list. Maybe upgrade, downgrade. We're past earnings, so that's good. Not showing a lot of volatility. I think there's a downgrade out of somebody here today. Looks like it's too illiquid anyways. Let's move on to DoorDash, DASH. Post earnings down 12.5%. Here's our chart. Has good upward momentum and is down 12%. I'm not sure what the options market was pricing in. Put side for March, you'd have to sell the 100 and buy the 95. The 100 is a little close, but you see how the 100 is green and the 95 is red. That means as far as what you get paid goes, let's see if the hands line up. Your 95 has gone down in value and the 100 has gone up in value. So that means that spread has gotten wider, which means you get credited more money if you sell the spread as compared to yesterday pre-earnings. Liquidity is not that great either. The 95 has got a, holy smokes, 36.48 spread. There's a lot of open interest at 95. This one's less liquid than I thought it was going to be. Let's do the math anyways, and then we'll look at April. 106 minus 43 divided by 2 divided by 500, 6.3% there. So yeah, on the March side, I'd sell 100 by 95. If you went out to April, liquidity is okay at 90. What if you... The 90 is a little far out too. If you sold 90 and bought 85, I don't know if you're going to get paid for it. 79 minus 49 divided by 2 divided by 500. Yeah, 3% there. You don't get paid for it. 95, if you sold 95 and bought 90, that's 142 minus 81 divided by 2 divided by 500, 6.1% there. So, interesting. Let's go back to the chart really quick, remembering 95. Catch support here, right at where it's at 110. Next spot for support's at 103. So support at 103. Next spot for support is down here at 96. And then another spot of support right here, the double top at 92.50. So there are spots for support as you go down. Let's follow up on this one next week too, DoorDash. We need to wait for some more downward movement here because it's run up so much since last quarter, straight up. Big day yesterday. Now it's down 12.5%, 13%, but it's not really at a point of support yet. There's some support here, but it's not that great. The better support's at 105. 105 to 103. Let's wait to fall a little bit more, okay? Next up, Nike. Not an earnings move. I think they announced the layoffs. I think they raised their dividend. think they announced layoffs at Nike today. Earnings are March 21st, so we got over a month. Volatility's okay on this one. Last earnings, we opened up below the 200-day and has sold off. Hit it a couple times and sold off. Could be catching support from back here in January. Bouncing, possible. Next stop for support is at 98 or so. Yeah, let's go with 98. Put side, March. Sell 95. You don't get paid for it. You kind of do. So earnings on March 21st. Correct. So this expiration, let's go back to the curve. This expiration at March, the monthly, is before earnings. So you don't have to worry about earnings for March. April's included. Put side for April, you'd want to sell 90. This one's not badly priced, just know you are holding through earnings. And good liquidity as well. Nike at 90. Let's take a look. 90 is down here, and also you have to worry about earnings. This one's tough. Let's wait for it to get down to like 98, 99. I'll follow up with this one next week too. Okay, Coinbase is next post earnings. I think they were profitable for the first time. Maybe, huh? Gap up, selling off. Okay. Sorry. Go to the weekly chart just to get a better look here. Got all the way up to 194-ish. Resistance at... Resistance won't be till 208, okay? So if we want to sell the call side, move farther than 208. We should get a good amount of resistance at 208 all the way up to 213. Back to the daily here. Call side for March, you'd have to sell to 220 or 230. 220 is a little close, and 230 is a little too far out. If we went to April, you'd sell 250 and buy 260. Let's take a look at that one. A lot of open interest at the 250 April. That's 887 minus 750 divided by 2 divided by 1,000 is 6.8%. Son of a gun. And everything is kind of close, but not where we want to be. Actually, you'd want to sell, well, 86, 82, 81, 7. You could sell either one March or April. Let us wait. We'll put Coinbase at, what did I say here? 208. Coinbase 208. We'll follow up on that one as well next week. Next up, DraftKings, DKNG. We traded this one a couple times. There's going to be nothing to do here. Gap down this morning. It's rallied back all the way to where it closed yesterday. It's slightly up now. This one's always very interesting. I'm surprised it's doing so well. Resistance at 47.50 from back here and back here and back here in July of 21. So coming up to some resistance, I'd say at 47.50. Call side for March, you'd have to sell 50. Good liquidity here too. Look at this. Look at the volume at 50 for March. Huh. And there's a ton of open interest. So these may be new positions today. The selling, the 41, it's a little close for me, but that makes sense. And on the call side, the 50. Wow, look at that. Let's do the spread on this one. If you sold 50 and bought 55, that's 50. So this is all institutional. All institutional people selling this one. 57 minus 15 divided by 2 divided by 500. Only 4% on that spread. Or it could be people that sold this yesterday and are closing it today. This one's perfectly priced, the 50. April, you'd have to go out to, skip April. The 50's too close, and the 55's too far out. And if you sold the 55, you can't cover it with anything. Put side, despite the volume here at 41, I'd go out to the 39, sell the 39, you get paid 39, it's all fair. Sell 39 and buy 36 if you want to cover it. 39, 36. 38 minus 9 divided by 2 divided by 300, almost 5%, that's not bad. 39 on the put side. Right here, that seems awfully close. If it does continue to fall, you do have great support at 39. Okay? And then some more support down at 32. Meh. Toast, T-O-S-T. Toast is a restaurant POS system. We actually use Toast at our company. Up 15% today. This is post earnings. Maintain neutral, Piper. Okay, resistance at, where are we at? Here, 22.72. Looks like it got there this morning. Next stop up is 23 and change, and then after that, 30. 31-ish. Call side for March, you'd have to sell 25. That seems fair. Sell 25 and buy 27. What do you got? 34 minus 14 divided by 2 divided by 200. 5% on the nose there. Put side, I don't know if you want to do that. Skip the put side, it's fairly priced. April, call side. Sell 27, you'd have to buy 28 to cover it. You're not going to get paid it. April, put side, sell 18. This one is still interesting. 18 on the chart. There's a lot of time value left in this one. 18. 18's right about here. Let me zoom in here. 18's right here. That seems fair. Let's keep going. Trade desk, TTD. Damn it. Up 16% too. Post earnings on this one. Volatility Says at 120 IV rank, maybe. Got all the way up to 94 this morning. And these are tough. Like some things you know right away, good to go, let's open it. Like the GDX the other day. These are all just kind of like wishy-washy. Big moves, but not big enough. Okay, call side for March. You'd want to sell 100 by 105. Liquidity's okay. Let's take a look. 113 minus 61 divided by 2 divided by 500. 5% there. Not worth it. If you go out to April, you'd have to sell 105 and buy 110. That's 157 minus 98 divided by 2 divided by 500. Almost 6% there. So that's interesting. Where's 105 on the chart? 105's up here. It's fair. Fairly priced. Nothing. Blah. Let's look at some follow-ups from earlier this week. Newmont is next. NEM. Earnings are coming up. I think. What do we got? The 22nd. So next week. If this can go down a lot before earnings, I'll sell some puts. If it goes down after earnings, I'll sell some puts. 5% yield on this one. Here's the chart. Getting support from back here in May of 2019 and also September of 2018. Oh, man. Put side for, let's take a look here really quick. Yeah, you have to do March. The 30 is a little close. If you go out to April, you'd have to sell the 27.50. 30 there. 30 is a 15. This one, 40 to 20. We're going to follow up on Tuesday. What day of the week is the 22nd? 22nd is next Thursday, so we'll follow up next week. Let's keep going. Twilio, follow up from yesterday, TWLO. Day 2, post earnings, downward momentum still. Today's the 16th, so no downgrades today. Closed below the 200-day. Should catch support around 58.50. Is there a lot of it? 58.50, no. Next stop down. Ugh. 52. Between 52 and 58. Put side. Skip March. Oh, wait. April, yeah. April, you'd want to sell the 50. Cover it at 45. 79 minus 29 divided by 2 divided by 500. 5% on the nose. This one's fairly priced too. If I had to, gun to my head, I'd sell the 50 by the 45. March, stay away from. It's okay. It's fair. Let's take a look at ARM, see what's going on. Down. So this moves over. This thing's going to come crashing down now. Can we get in on the call side? Maybe too late. March, you'd have to sell the 175 and buy the 180. A lot of open interest here. These two. This is the spread everyone's selling or has sold. April, you'd have to go out to 185. Very illiquid though. Interest. 80, 70. On the put side, they're selling the 80 and buying the 70, or selling both. A lot of open interest at the 80 and the 70. Cool. Okay. Next up, Alcoa. Is it down yet? No. Looking for Alcoa at 25. Not there today. We may not going to get down there. It did actually get down there a little bit on the 13th. Maybe missed that move. Son of a gun. All right, let's go to our IV rank scanner. We'll sort by volume. SPY's at 41. Yeah, okay, sure. IWM, hold. Wait for it to get to 210. I'll sell the call side then. Nvidia's on the 21st. That's next week. Apple. I know Apple's had a tough time this year. January. Yeah, Apple's down on the year. Well, it's hitting the 200 day. You got that. Put side. Put side for March, you'd want to sell 170. You get 66 bucks. Not really getting paid for it. April, you'd have to sell. Better liquidity here in April. Wait a second. Sorry, not better liquidity, just better prices. You'd have to sell 170 and buy 165. 170 pays you 167. $170 on the chart is down here. I don't know if you can see it. 170 is right here. For April, that seems fair. Earnings are not till May 2nd, so that's after expiration. Interesting. AMD, pass. Coinbase, we looked at. Marathon did Palantir. We're short call spread on that one. Robinhood. Robinhood's still on this list. Take a look. HOOD. I know they had a great quarter. Interesting. So Robinhood's gapped up, sold off, and it's having a rally of a day today. Resistance at, from back here in 2022 at 15. Let's call it 15. So about a buck away. Next offer resistance is at 16. And after that, it's got a huge gap to fill all the way to 33. So if this thing takes off, beware. I'd be concerned because this thing has gone sideways since January of 2022. So there's a lot of wound up potential here. This could go up fast. I'd be careful selling the call side here. Roku we touched on. Trade us we got. ARM, it's too illiquid. No. Baba? We'll pass on the Chinese stocks today. FXI. FXI is at 96. Okay, let's not pass up China. FXI. We've traded this one before. Gee golly. It's tough. I'd rather have downward momentum and then sell the put side, or a move up to 24.80 and sell the call side. So we're literally hanging out in the middle of nowhere. March put, sell 21, get 15. March call, sell 25.50 and get 21. April put, sell 20, you get 20. That's fair. Call April, if you sell 26, you get 37. So you can make the case for selling the call spread for March. 26 on the chart. 26 is right at the 200 day. This is fairly priced. I'd rather have a bigger move up. If this could get up to 25 or so, then I'd sell the call side. We're a little early to sell the call side, okay? Close. This one's very... If this was at 25, I'd open up the call side today. We're not there yet. FXI, done. Lyft, we're already in. Bank of America. I don't know why the banks are here. We got 2 months till earnings. PayPal is a no. Uber. No. Intel. We've got the flagship Foundry event on the 21st. That's next week. That's going to be exciting because Intel Chief Executive Officer Pat Gelsinger and other Intel leaders, blah, 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 keynotes and news to bring Intel's vision for delivering something, something, something. Maybe. INTC. Nothing to do here. Gap down after earnings. It's gone sideways. I doubt there's any volatility in this guy. Slightly for March. Put side. Sell 39. Actually, considering this is post earnings, this is very fair for March. 39 on the chart. 39 is right about here. This is, and you're going to get support at 39. Gee golly. This one's tough. This one makes sense, actually. I'm not going to lie. I was making fun of it. I shouldn't have. This one makes sense. For what you're getting paid, for how short you are till expiration, and the amount of support you have here at 39, this one is very interesting. Check it out. We'll follow up next Tuesday if we can get some more sell-off of Intel. INTC at 39. Okay. This one, I would just sell the put right out. It's Intel. April. You'd have to sell the 37. You get 41 bucks. This one's fair too. I'd go to March. You get paid more for March. 35%, 39. Yeah, you get paid more for March. Okay, back to the list. The K-Web. Taiwan Semi. Snapchat's down 5%. Maybe got a downgrade or something. Had a bad earnings report early this week, or maybe it was last week. I can't remember. Last week. So bad earnings report last week. Gap down, sell off. It's kind of gone nowhere, but down again today. It's caught the support from back here in June of 23 and had a very mini bounce. Next spot for support is at, let's call it 1050. And then support again at 980. Let's skip this one. Right, Rivian on the 21st. We've traded Rivian before. Micron. All these semis are on this list because it had such a big move up. And We're in the semiconductor ETF as a group, so if we can get sell-off going on in there, we'll be good. I don't want to have any more semi-exposure, except maybe Intel on the put side. It'll balance off the short call spread we got. Toast we already looked at. Square we looked at. Adobe's too big. Next page. Carvana on the 22nd. No to American Airlines. There's an event on March 4th. It's Investor Day. Citigroup. No. Wells Fargo. I don't know why the banks are on this list. WFC. Let's look at JP Morgan too. Look at that. What a day yesterday. Moved from 48 to 52. What a day. Resistance coming up around, oh, what's this here? 52.80. And the next stop is at 55.80. If you sold the call side here, March, skip March, April, damn it. You'd have to sell 57.5. You get paid $66. Spread at 60, get 33. This one might make sense. Let's do the math. Very liquid. 66 minus 33 divided by 2 divided by 250. 6.6% there. The 57.50 is a little close. 57.50. 57.50 on the chart is right here. Remember, this is April expiration right here, and this doesn't include earnings. So this one's very fair. Let's take a look at JP Morgan. Prefer to trade JP Morgan. It had a big day yesterday too. It's at all-time highs. Skip the put side, call side, skip JP Morgan. Wells is interesting. You can make the case for selling the call side on Wells. I wouldn't argue with you. I think after such a monster day yesterday, this could slide back a bit down to 49 or so. Back to the list. KRE, pass. Pass on Boeing. Semi ETF, we're still in. Lilly. Lilly's been on a roll. Shopify. Cisco's still on the list. Although hardly any movement today, so it's probably not going to be as expensive as we need it to be. Skip Pfizer. The GDX. We missed the move on that one. VOD. ARC. XBI. Don't forget to set your alarm for XBI today. Nike, we already looked at. We're going to follow up next week. Walmart on the 20th. Let's take a look. No. We'll have to wait till after earnings. If after earnings there's a big drop on Walmart, we'll sell the put side. Skip for now. Actually, what is the put side priced at? Put side, you'd want to sell the 160. That's fair for March. 160 on the chart. Yeah, that's fair. Put side, 160 is right here. You got the 200-day coming up. You got good support here at 160. This one's very fair. Dollar General on the 14th. I wonder why this is up so big. It's got a month till earnings. Let's take a look. DG. call side, you'd want to sell 160 to a liquid though. April to a liquid. Skip this one. Next up. What time are we at? 8 o'clock. Freeport McMoran. Couple more and then we'll call it for this Friday. Western Digital has an event on the 5th, the Morgan Stanley Technology, Media, and Telecom Conference. CCJ's still on the list. I'm surprised. We sold puts in that one. Surprised it's still that volatile. CCJ. Here's our chart. We sold puts right on the day of earnings, right around 45 or so. It's moved against us. It's kind of settled out, slightly rolling back up. If it did continue to rally, it will get to at least 46.50. Put side today, March, you'd want to sell the 38. You only get 30. You don't really get paid for it. What did I get? CJ 18 times 2. I got 36. So you don't get paid as much. April, you have to go out to the 36. No volume. So I get 48 for it. That seems fair. 36 on the chart. At 36 is out here. You can make the case for selling April. ABR. Earnings were today before the open. ABR, maybe this one's not liquid enough. Up 5. Yeah, to a liquid. A lot of open interest, so we got a 15-cent spread here. Skip this one. To a liquid. UPS is on the list for some reason. Let's take a look. They had a bad quarter this year, or this quarter. Gap down, not much movement. Let's skip this one. Put side. Yeah, skip it. Snowflake's earnings are on the 28th. Skip AT&T, it's too small. End phase, no. Baidu. On the 28th, we have earnings. Carnival Cruise Line still on the list. IBM on the 24th of April. That's pretty far out, man. IBM. No news. Okay, volatility. Take a look at the chart. Let's look at the weekly chart. We have to go back to, oh Lord. We have to go back to 2013. Hard to tell on this one. I'd skip it. Too hard. Oracle as well. December, January, March. We should have earnings in early March here. Dropbox down 20%. I think they had earnings, but they're illiquid. Let's take a look. DBX. DBX. Down 20%. Holy moly. B of A downgrades to underperform. 28. JP Morgan downgrades. Holy moly. Okay. Could catch a bounce here right at 26 or so. Next stop down is 24.30. Put side, it's too liquid. That's how we skipped it. Yeah. Too liquid. Couple more, and then we're going to call it for the weekend. Strike. RX. You know what? I think that'll be it. All right. Had a good week. Had some things fill. Had some things open. XBI. Sometimes you got to take a loss. That's okay. It's not personal. After all the wins we've had this year, it well overtakes the 1 or 2 losses. All right. That'll do it for today. Have a great extra long weekend. We'll be back here Tuesday morning. Tune in every morning at 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. We go live every morning trading options. Also tell your friends who are trading to tune in as well. Like, subscribe, all that good stuff. Have a restful weekend. Get some rest. We'll see you all come Tuesday morning.